Hi everyone, Megan Marsh here with Select Mortgage in Erie, Pennsylvania. Today we're going to be talking about refinancing because a lot of people are having questions about refinancing. If you have purchased a home in the last, even if it was 3 years ago, sometimes even in the last 2 years, you're going to be refinancing your house. I bought my house 4 years ago and I've refinanced it twice. That also shows you that none of us in the loan business know what the rates are going to do, but if you are going to be saving a decent amount of money and you're going to be in your house long term, it's very smart to look into refinancing. I'm going to use an example here to show you why you would refinance and the best way to use the refinance in your benefit. So on a 30-year loan, let's say you borrowed $150,000 at 5 1/4 originally, your principal and interest on the loan, and let's say you're going to have mortgage insurance on the loan, your total payment would be $911. Let's say today, 30-year rates are around 4.125, that would bring your payment down to $810, so you would save around $100 a month. Definitely worth refinancing your house. Number two, the best way to do it is if you can reduce your term. Because the rates are so low right now, a lot of people are going down to a lower term. So a 20-year loan at 3.75 would get your payment to $973, a little bit higher than what your payment is now. But if you look up here, your original loan at 5 1/4, you would be paying $307,000 over the life of the loan. If you put it on a 20-year, you would be bringing that number down to $217, so you're saving close to $90,000. You could also go to just another 30-year loan like we looked at, and you'd still save money. You'd still be saving it's about $38,000. The reason it wouldn't be smart, which is why I did this chart here, is let's say you bought your house here in year 1. On year 3, this is year 3, you refinance your house. And then let's say 2 years later you decide to sell your house. Well, if you never refinanced, you'd owe $138,000. Because you refinanced, you started over, you added closing costs, you owe close to $142,000. So when you go to refinance, don't just look at what the monthly savings is, because if you're ending up owing more over the life of the loan when you're just going to go sell the house, it's not worth it. Now, you could refinance knowing you're going to sell in a couple years as long as you take that extra $100 and apply it to your mortgage. That would be a smart thing to do. So I would recommend refinancing into the same term. If you're going to pay over, pay what you were paying before, or go to a 20-year loan is the best way to do it. If you have any questions on refinancing, interest rates, you can email me at Megan, M-E-G-A-N, @selectmortgageerie.com. Thanks for listening.